Welcome back. So let's do a little deeper dive on costing. We're going to talk about process order costing versus job order costing. And we'll do a little share screen here that'll show the discussion of our costing systems. When we talk about process manufacturing, these are identical units on a continuous basis. So if we're making Pepsi or Mountain Dew, we're going to have a continuous process and we'll make some more and another batch, and they'll keep going on and on. Where a job order is a specific job, and it could be a number of similar items being made. We have, we're a t-shirt shop. So we might have a batch of 50 or 100 t-shirts that need to be made, but then we're done. We're not going to make those same t-shirts again and again and again. Otherwise, that would be actually turned into a process costing. Same thing with Kellogg's Corn Flakes. That's going to be more of a process manufacturing, continuous process. We'll keep making more and more corn flakes, where sometimes we have special order foodstuffs and more of a catering business would go along the lines of a job order. What are some of the other terminology we should be aware of? Well, we got something called the bill of materials, and they are exactly what it says. These are the materials or the raw materials that are needed to produce whatever we're making. It's a listing of all the physical materials that are going to go in to produce what we're making. It includes the quantity of the material, the type of the material, the description that goes with that. And then we have the operations list. So these are detailed operations on what we need to do. 10 minutes, heat this up, and 15 minutes to handle this. And whatever we're doing in the manufacturing process is part of the operations. And combined, that gives kind of a roadmap to when we and how we produce things. The production order details specific production job. So if we're assembling a vehicle or a car, we might say we got these extras going into it. If we're assembling a t-shirt, well, maybe you have 3 colors or 3 rounds that need to go through for silk screening or whatever we're producing. So quantity produced, we're going to produce 100 of these t-shirts. What's the materials that's going to go into it? Okay, we need this ink. We need these actual white t-shirts or colored t-shirts to actually be used in the process. And what's the activities? Well, we have activities that are going to go on, and the activities are going to dictate what order we do things and how we do things. We then go ahead and we have a job cost sheet. In order, we have a date, department, requisition number, description, total cost, and our job cost has the job number. Can't get away from numbers. We have a start date. We have a product number, or description, or quantity. So this job cost sheet's an order sheet, and it accumulates the cost as we go through the job cost system, accumulating the cost as we go. This is our basic record for keeping. It looks like a manual process, but these days everything is pretty well automated. And we're back to these 3 broad categories: direct materials, direct labor, and an assignment of overhead based on a certain factor. So we're looking at the production files, and we have the materials. We have a subsidiary ledger where we have different materials that are going to be put into process in the system. And we're going to pull those out, material A, B, and C in this example, and those are going to go into producing whatever we're producing. So there's a requisition form saying, okay, we need so many of part A. Let's go get it. We need so many of part B. The transfer is recorded. Now, again, it's automated. It's usually scanned, and it's, go to the storeroom or supplies room, and you kind of requisition it out. You take it out, and you're going to add those to the costs of what we're producing. And finally, the work ticket records the time on the job. Often is used not only for allocating how many hours or minutes or whatever was spent on the job, but it kind of ties into the payroll system as well. Time on the job and these labor and time costs are assigned to the job. Let's go a little deeper dive and operate a job cost system here. So I'm going to actually close this off a little bit and think about the materials, the labor, wages, and the overhead. And you notice there are 4 overhead categories here. It could be 7, it could be 10, but there's only one that's on the right-hand side. So we have raw materials transferred in to job, and there's our raw material inventory, but then we have the raw materials used, transferred out to work in process. And then we have the wages. We have the wages going out to work in process as well. And then we have an allocation of overhead going into work in process. Notice the actual costs of overhead are not jumping into work in process. The actual costs are being accumulated in the overhead account. And then we take that standard overhead rate that we figured out, again, based on labor hours, pounds of material, machine hours, whatever it might be, and we transfer and allocate that overhead estimate into work in process. And if we've got so many units done, we get now already to transfer from work in process into finished goods once they're completed. And then once we sell them, they go out of finished goods and into cost of goods sold associated and ends up on the income statement of what we do. So that's the flow. I'm going to broaden this out and widen this a little bit. And we do have accounts payable for the materials that we bought. We have other payables, which are indirect overhead or indirect materials, manufacturing supplies, more indirect materials. We might have some indirect labor going into our overhead. And then we have a depreciation that's part of our overhead. These are all the actuals that we're accumulating again, but we transfer out based on a standard. So by the end of the month, or the end of the quarter, or the end of the year, these two numbers will most likely not be identical. We might have over allocated. If we have 100 million and that we actual expenses and only 90 million allocated, we did not allocate enough 10 million worth into our work in process because only 90 million would have gone in. So we got to be careful and be aware of that. And we're going to have to adjust that. And eventually we adjust it and wash it directly to cost of goods sold. We'll see how that works, but I want to introduce that here. So job sheet, as we incur costs, they're assigned to work in process and they're tallied on the job cost sheet. When jobs are complete, the costs are determined looking at the sheet and they're transferred from we'll go back here, transferred from materials into work in process. Work in process gets transferred into finished goods inventory. On a manufacturer's balance sheet, we have three categories for inventory for the products we make or produce. And we still have supplies inventory as well. But the three raw materials, work in process, and finished goods. And again, notice our work in process and finished goods include labor, wages, includes overhead, depreciation, and other stuff to go with that. So that's where we're assigning to work in process, and then from work in process to finished goods as we complete. So job cost example, we got raw materials coming in, started with 14,000 raw materials. We added 45,000 raw materials. We have some other manufacturing supplies. We're going to go a little forward. We have our inventory we transfer out, 34,000 goes out of the materials and into work in process. So we take that 59, what's left here is 59 less the 34. So we've got 25,000 left in our inventory. Raw materials, not using it yet, but 34,000 has been transferred into work in process. And once we finish our work in process, we have a bunch of work in process going in, materials, labor, and overhead. And our overhead started with a balance. We added these things to it. We have our wages, but we're going to end up transferring the stuff into our overhead account. Manufacturing supplies, again, indirect materials, depreciation on equipment and factory assets, miscellaneous other stuff that we can't assign as direct materials or direct labor for that matter. These are just general stuff that is included in the production and costs that are associated with the production. They end up in overhead, not in the line items individually. So we apply and say we had a standard $17 per direct labor hour. We're going to apply 1450 labor hours used, 17. We're going to multiply that out and pull out 24,650. That 24,650 is going into work in process. Now over here you say, well, that looks like 15, 17, 23, 24, 3. So it's not quite 24,650. So our actual here and our overhead here, that's actually pretty close, within a couple $100, but it's still off. It's still not a perfect match for what we actually incurred and what we allocated based on our $17 an hour figure. So we have work in process. We finish our work in process stuff, transfer it over to finished goods. We're done with the materials themselves, taking the materials, labor, overhead to make something 100% done. The car is done. The house is complete. We've transferred and we're ready to put this stuff as finished goods for resale. And then finished goods, we'll move it over to cost of goods sold once we sell the stuff. In this case, we sold 148,000 worth of stuff at retail. We got a receivables of 148,000, but we only had cost us 63,370 in our finished goods. That was a cost to produce it, and we sold it for 148. So we have a gross profit of 148 minus the 63,370 for a total of 84,630. Is that good or bad? Well, it's profitable, but no way of telling if that's good or bad unless we compare it to some other numbers. It looks pretty decent from what I'm looking at and what you're seeing, but maybe we have the costs now, maybe our costs are much higher or much lower, and we can make some determinations when we analyze how we're doing. All right, so direct materials requisition for the job. Here's a bunch of materials going associated with different jobs. Again, this is a job costing system. Each job is a separate job number. This is not a batch-oriented system. It's not a process costing system. It is a job costing system. And each job has different costs associated with it. So then we can analyze each job by itself and isolate it saying, okay, job 64, job 65, 66. Here's our materials, our labor, overhead associated. And then we completed them, transferred out, and we can analyze each job if it's profitable, basically, because we know what we sold each job for. And when we have a cost of goods manufactured statement, we have a summary here. Raw materials plus purchases is total available, just like our inventory formula we've learned before. Beginning inventory plus the stuff we got is total available for sale in when we did inventory, but total available. How much raw materials at the end of the month? We have 34. How much direct labor? 17.4. How much overhead applied? Key term here is applied. How much of that overhead was applied? 24,650. So our total costs, 76,050. Work in process at the beginning, available work in process. And what do we transfer out? Well, we transferred out 81,000 because we had 13,000 left equivalents in work in process. And so it's either, in this case, it's either work in process or it's out of here. It's like good manufactured. In our original inventory analysis, if these are cost of goods sold or still here, it's an inventory. The same concept of a cost of good manufactured sheet. Income statement. Well, we look at the sales revenue. We look at the cost of goods sold, finished goods inventory at the beginning, cost of goods manufactured, total goods available for sale, less finished goods inventory. This is our cost of goods sold. That's not a bad formula to know about. Finished goods inventory at the beginning, finished goods inventory at the end is based on our total cost of goods manufactured, what we had, and we have the ability to figure out what our cost of goods sold are. We get a gross profit. We have SG&A, or in this case, S&A, of 43 for a net income of 41,630. As we look, we keep saying that we're using a standard allocation of our overhead. Standard allocation. So we calculated an amount based on a projected total, in this case, labor hours, and a projected total overhead. We came up with an hourly rate. Every time we use labor hours, we injected those overhead costs into our work in process system, which ended up into our finished goods. The catch is, it's still an estimate. We have a bunch of stuff we allocated based on a standard, and we were accumulating those costs on the actual costs we were incurring. So we're going to have a difference that we need to eliminate at year end. So again, we're either under applied or over applied. We either applied too much or applied too little. And then we have to adjust. We eliminate at year end and we wash it out or adjust it to directly cost of goods sold, the different in that overhead account. And if you recall, we were looking earlier at our overhead and figuring out, let's see where the costs associated with that were. We had our manufacturing overhead. Here's our actual cost in the left-hand column. But what we actually allocated out was in the right-hand column. The difference between these two is what is either under or over. If we sent 24,650 and we only had 24,000 in accumulated cost, we put 650 more into the system than should be. And we have to wash that out eventually. And we're going to say, oh, we're going to put another, we'll make these columns equal. So we get another 650 or whatever it is here, and we wash it out to cost of goods sold. So if we over applied, we're going to adjust our cost of goods sold. If we under apply, we'll adjust our cost of goods sold in the opposite direction. So that's what we're doing when we're adjusting to our cost of goods sold. So this in case it was a 450 difference. More overhead was applied than actually incurred. So cost of goods sold is going to be reduced by this 450 difference. Okay, so we had 24,200 total here and 24,650. So we have another 450 we got to worry about. Actually, well, let's do the math. 17, 6, 23, 24. Yep. Yeah, we're 450 short. So we over applied 450, too much. We have 24,200 in this column, 24,650. 450 was applied too much. We're going to have to pull it over into cost of goods sold and add that to the cost of goods and adjust our cost of goods sold by decreasing it at that point. So this is kind of a concept you want to get a handle on. You want to understand that materials and labor are the actual and overhead is the estimate. And because that's an estimate, we're going to adjust accordingly. Thank you very much, and we will continue onward and upward.